Okay, so professors, we are starting a new topic, and that is control account. Now, I'll quickly take us through the overview of this topic and what is expected of us at the end of uh, this course or this topic. So when we talk of control account, I'd want to start by saying, you remember at the time that we were doing the double entry, we opened a lot of T accounts, okay, where we do our debits and credits, and we balance them off and extract a trial balance. Now, you would all agree that the T accounts we prepare are plenty, or they are many. Okay, so sometimes it becomes difficult if we want to estimate certain balances on some account. And so to make things easier and faster with regards to ascertaining or determining certain balances, control accounts come into the picture to assist us summarize the numerous or the plenty T account we have prepared in the books of account. So control account mainly bothers about summary. You are summarizing accounts. It means that, for example, if you have about 20 accounts in a particular book, you can summarize it into just one account. What it simply means is that all the items that have been debited in these 20 accounts, you will bring them together at the debit side in one account. And all the items that have been credited, you do same. Okay. So, as I've indicated, control accounts are accounts that are used to do summaries, or they are used to summarize accounts. So if I'm to read the introduction here, it says, account in the general ledger known as control account serve to compile numerous transactions. They are therefore incorporated into the double entry system. They are used to verify that ledger entries are accurate in terms of math. They are mostly employed to compute the balances of debtors and creditors. And I think professors need to note this. The main reason why we prepare control account is because we want to know the balances or the total balances on debtors and creditors account. A control account in the general ledger is a summary account. So this is the point that I made to you earlier. It is a summary account. It is used to summarize plenty account. This account summarizes the totals for transactions that are kept separately in subsidiary ledger account. Control accounts are typically used to summarize debtors and creditors because of the huge number of transactions they include and the need to separate them into subsidiary ledgers rather than filling the general ledger with excessive information. The final balance on the control account shall be the same as the final balance of the subsidiary ledger to which it is related. It's possible that a journal entry was made to the control account but not the subsidiary ledger if the balance is different or vice versa. So professors, the point I again want to emphasize is that control accounts are used to summarize accounts in simple terms. That is what it means. Like we have been doing summary in English where they'll give you like 10 paragraphs and ask you to summarize maybe in 3 sentences or in 5 sentences. So all that you try to do is to reduce that quantum of text in the numerous paragraphs into something very small like 5 sentences. Okay, so by the end of the lesson, you are supposed to identify the nature and purpose of control account, explain the need for divisions of the ledger to prepare control account, and we list the major types of control account. Look at the advantages of control account, and then we'll look at preparing these control accounts. So my professors, please, I would employ one of you to read for us what you see on the screen here under self-balancing ledgers or control accounts. So whoever is ready can read it for. So who do the reading? Should I call or one would volunteer? Prof. Ashley, if you can read for us what has been selected or highlighted. Prof. Ashley. Prof. Ashley, are you there? Okay. Let me hire a lawyer to do it. Prof. Delade, can you be the lawyer for Ashley? Read for us.
Okay. Self-balancing ledgers, into brackets, control account. Control account is a master account prepared by summarizing all the individual similar accounts in a ledger. It is an account that is debited and credited with the total amount of all transactions which have been debited or credited to individual ledger accounts. It follows, therefore, that the balance on the control account should be equal to the sum of the balance on the individual ledger account. In summary, a control account is an account which in record is kept for the total value of similar but individual items.
Okay, thank you very much. So let me give you a practical view of this so that you can appreciate it better. So as she read it, we say, oh, this control account's main aim is to summarize a lot of accounts, but we are saying these accounts are supposed to be similar. So you can't summarize different accounts into one account and call it control account. So for example, if we have, let's say, this account for Kofi, okay, who is probably a debtor to the business. And we have several debtors, like another one, Amma. Then let's assume we have more, okay? AC, we have XY Limited, we have, so let me draw plenty of. Now, if all of these are account of debtors, then the understanding is that you can summarize them into one account and call that account a control account for debtors. So what then we are trying to do is that we want to summarize all these 1, 2, 3, 4, 5 accounts into one account. So it makes sense when it says that the balance you get on preparing this one account should be equal to the accumulation of all the balances on these debtors account. Okay, so a control account is prepared to summarize various or numerous accounts in a particular ledger. But mind you, the account should be similar. So if it is account of debtors, then you can summarize all account of debtors. What it means is that you cannot mix the account of debtors and creditors in one control account. Why? Because these accounts are not similar. A debtors account and a creditors account cannot be the same. Okay. Please, if there's any question, you can ask as we proceed. Okay, so let's move on. Now, why do we prepare control account? What is the purpose of preparing a control account? And Prof. Emanuela, can you read the first purpose for us? Actually, you wanted to say something, you can go ahead.
Please, okay.
Okay, thank you. So, Prof. Ella, can you read the purpose of control account for us?
Control 1. Control accounts help detect errors.
Okay.
Sir, please, am I reading all?
Yes, please read all the 4 points for us.
Okay. 2. It serves as an internal check on the account staff.
Okay.
3. It provides a proof of arithmetical accuracy of the bookkeeper's entries in the ledger.
Okay.
And then 4, the debtors and creditors control accounts provide total debtors and creditors balance more quickly to prepare trial balance or final accounts.
Okay. Thank you very much. I think as we proceed, you may understand these advantages better. But it is important to acknowledge that the reason why, or the purpose, or the benefits for preparing control account include it will help you detect any errors if there is. Okay. So if the bookkeeper made mistakes in preparing the individual ledger account, then the control account will reveal it, because then the balance you get on the control account may be different from when you accumulate the individual balances on the account. Right? So it helps to detect errors. And I think as we move further, I'll be linking some of these advantages at some point. It serves as an internal check on the account staff. Yes. Now this is because control account is prepared, using certain information different from the individual accounts that have been prepared. Now the example that I gave just a while ago. So let me do that again so my professors can publish. So if say we have 1, 2, 3, 4, 5 accounts, and we want to summarize it into one account. You see, the control account is prepared not picking information from these accounts. Normally, we pick the information from the day books. Remember, the day books, if I may list them, the sales day book, purchase day book, return invoice day book, return outwards, the cash book, petty cash book, and the general journal. They are used to prepare the T account, but when we prepare the day books, we post to the ledgers. Okay. Now, the control account is also prepared using the same day books. So if the person who did the posting into the ledgers made a mistake, then in preparing the control account, that mistake may be revealed, because then we'll use the same data in the day books, right, to prepare the control account. So if probably when the person was posting to the ledger account, the person made a mistake, then you would acknowledge that the balance on the individual account will be different from the balance on the contract. And that is where we can detect the error. And as such, if the accounting staff was trying to do something funny in posting to the ledgers, then when we prepare the control account and there's any discrepancy, we can check on that particular account. And so that is why it's being stated that it serves as a check on the accounting staff. Because if we prepare the control account and there is any error or discrepancy, then we can hold the staff accountable that why these errors. Okay. Let's move on. And again, it helps us to know the total debtors and total creditors balance more quickly. There are some disadvantages, and one of them says that it does not reveal all errors that may have occurred in the books, like error of omission, error of commission, and error of original entry. Yes, this is so because you see the control account is also prepared using the information in the day books, right? Please, I want you to get this in perspective, right? If we are preparing our ledger account, I don't know if you remember when we did when you did the books of account, preparing the day books, sales day book, purchase day book, and all the other day books. You see that when you finish, you post them to the ledgers, or you post them to the T accounts in all the ledgers, the sales ledger, purchase ledger, etc. So we are saying that it is this same information in the day books you use to prepare the control account. So if there was any error at the time you were preparing the day book, then that error will still be in existence because then your control account cannot also reveal it. So for example, if a transaction was not recorded in the day book, that's the error of omission. Omission means you didn't record it. Then your control account cannot reveal it because you are also picking the information from the day books. And if the thing was not recorded in the day books, there's no way your control account can reveal it. Error of commission. This error is, for example, I'm Kofi, you are Kofi, and the transaction was supposed to be recorded in your account. But because of the name similarity, because you are Kofi, I'm Kofi, it ended up in my account. Sorry. Even though this is a mistake, it is difficult to identify it because I'm Kofi, you are Kofi. And so until there is a critical analysis to find out that, oh, the entry was made in the wrong person's account because of the name similarities, it will continue to stay in our books. Then error of original entry has to do with using the wrong figure due to transposition of figures. So instead of the accountant, for example, writing 760, he or she transposes. Transpose means you are changing the position of the figure. So instead of 760, you write 670. So you see, he changed the position of the 6 and 7. Okay. Now let's go to the types of control account. Professor says we are only going to look at two types of control account, and as it has been coming up, these are the control account for the debtors and control account for the creditors. So these are the two main control accounts that we are going to look at. Now, the debtors control account is also known as or referred to as sales ledger control account. Why is it so? It is so because in the sales ledger, if you remember from studies or from the topic ledgers, you know, the sales ledger keeps the account of debtors. So if you are preparing a debtors control account, it's the same as sales ledger control account because the sales ledger keeps account of debtors. Likewise, the creditors control account can also be referred to as the purchases ledger control account. So these are the two types of control account. Professors, let's meet in the second session and